Welcome back. Thank you for the earlier discussion. Moving into the next item on our agenda, we have had a technical committee working on the issue of taxes and payments to governments, and they have proposed some draft content for us to look at. So I think we're going to ask, Mia, are you going to talk us through this?
Yes, but
Okay.
Bastian's going to kick off with a short comment.
Fine, okay. I will turn it over to the Standards Division, and then I think, Kent, you are our liaison on this committee, are you not? So I'll ask you to share some views as well once we've done this. So yes, please go ahead.
So just some initial remarks from me regarding this project update. What we're presenting to you today is indeed an update on the project. It is not combined with an ask to you to approve an exposure draft. What we've learned, I think, is that this project has quite some unique characteristics for GRI in several ways. One is, we're actually, for the first time under the new structure, working basically on an entirely new issue for introduction, at least at this level of detail, to the GRI standards. Second, it is a project that resonates, I think, well with public discourse in the sense that it is probably one of the most high-profile ESG, if you will, issues in public debate at the moment. And a lot of what we do actually resonates with activities of regulators, institutions, around GRI, in the ecosystem of GRI, but also groups that were not part of our ecosystem at all, and it's maybe the first point of contact. They weren't quite aware of the work that GRI was doing, but they see with this project that we're also venturing into this field. We're presenting this for discussion today also so that you have full visibility of how we try to combine the work of the technical committee, the experts there, with getting initial feedback on the project from a wider set of stakeholders. So it's a combination of things. What I should point out is that the draft that you've looked at is not inclusive of the feedback that we have received through the field test. So that will only happen in the coming weeks, and the exposure draft that we're planning to present to you for approval will then already acknowledge some of the discussions that Mia will now allude to, what we've learned from the field test. So that's just as a framing. Mia will now lead us through the detail of it. It would be really beneficial if you could come on with question immediately. This is a fairly involved subject matter, lots of different details to it, so that we keep the discussion interactive and we can help you understand where the technical committee is headed at the moment.
Thank you. So I might start with a quick reminder of the basics of the project. The disclosure on taxes and payments to governments project is intended to develop new specific disclosures related to taxes and payments to governments, which will then be considered for incorporation into the GRI standards. The aim of this work is to help promote greater transparency on a reporting organisation's approach to taxes, including potential elements such as tax strategy, governance, and information on actual taxes paid or payments to government. As you're aware, the technical committee commenced their work at the beginning of this year, and up until today have met 7 times. Okay. As you know, as I updated you and the last time we spoke, the technical committee has been developing a draft standard, which they are recommending for inclusion in the standards as a topic-specific standard. They are coming to the end of their initial development phase. So if you look at the project timeline on the left-hand side of the slide, in phase 3, we're right at the end of that phase. And as part of that process, during July and August, the preliminary draft, which was also provided to you as item 3 in your pre-reading documents, was field tested with members of the business, civil society, mediating and investment institutions. In the next slides, we'll first provide an overview of the draft disclosures that have been developed up until this point, and then present a summary of the outputs of the field test engagements. The feedback collected during the field test has been presented to the technical committee, but is currently under consideration, and they are finalising their responses to that feedback. The next meeting of the technical committee is scheduled for next week, and there they will agree any further refinements to the current draft that you've seen. Okay, so on the slide there is an overview of the 5 disclosures that make up the draft standard. Since we last spoke, there has been no changes to the structure of this standard. It includes both 3 disclosures that are management approach and then 2 topic-specific disclosures. The management approach disclosures are focused on how an organisation approaches and manages its taxes and payments to government, covering tax strategy, governance, control, risk and stakeholder engagement. They are intended to provide insight into how the reporting organisation balances regulatory compliance with its business concerns, as well as ethical, societal and sustainability-related expectations. This section is designed to supplement and not to replace GRI 103. Disclosures 4 and 5 require organisations to report its entities and activities by tax jurisdiction, as well as other financial, economic and tax information on a jurisdiction-by-jurisdiction basis. There would be an expectation that reporting organisations would report both disclosures 4 and 5, so no opportunity to report only one of those. These disclosures will aid report users in understanding an organisation's scale of activities and its corresponding approach to taxes and payments to governments across the tax jurisdictions in which it operates, as well as providing insight into the reputational and financial risks inherent in an organisation's tax transactions. So I'll spend a little bit of time going through the disclosures and then we'll come, as I said, to some of the feedback we've received from a variety of stakeholders on those disclosures. So if we start with the management approach disclosures, disclosure 1, which is about the approach to taxes and payments to government. This disclosure requires that an organisation would report a description of their approach to taxes and payments to government, including whether they have a tax strategy and where this tax strategy may be read, the governance body or executive level position that formally reviews and approves this strategy, and the frequency of that review. How the tax strategy describes the organisation's approach to regulatory compliance, and how the tax strategy is linked to the business and sustainable development strategies of the organisation, as well as to the broader economic needs of the society in which the organisation operates. Moving on to disclosure 2. This disclosure requires a description of the tax governance and control framework, including the governance body or executive level position within the organisation that is accountable for compliance with the strategy, how the stated approach to taxes and payments to governments or tax strategy is embedded within the organisation, and the approach to tax risks, including how risks are identified, managed and monitored, how compliance with the tax governance and control framework is appraised, any mechanisms in place for reporting concerns about unethical or unlawful behaviour and the organisation's integrity in relation to taxes, and the assurance process for disclosures relating to taxes and payments to government. This disclosure is very much focused on how the commitments in disclosure 1 are embedded within the organisation and how the organisation assures themselves that they are living up to those commitments. The final management approach disclosure, disclosure 3, stakeholder engagement and management of concerns. This requires an organisation to report a description of their approach to stakeholder engagement and management of stakeholder concerns in relation to taxes and payments to governments, including their approach to engagement with tax authorities, whether taxes and payments to governments are a focus of the organisation's public policy advocacy, and any processes for collecting and considering the views and concerns of external stakeholders. Okay, so if we move on to the topic-specific disclosures now, disclosures 4 and 5. Disclosure 4, which is entitled Entities and Activities by Tax Jurisdiction, requires the reporting organisation to report all the tax jurisdictions where the organisation are resident for tax purposes, as well as any entities that are deemed not resident in any tax jurisdiction by the organisation. This is a nuance apparently for certain organisations where they may have entities that are not necessarily deemed to be resident in a particular tax jurisdiction. For each tax jurisdiction in which the organisation has resident entities, they will need to report the number of entities, the names of the principal entities in that jurisdiction, and the primary activities of the entities. I should just point out here that when we say primary activities, it's a very short summary of the activities of the organisation in that particular jurisdiction. So you wouldn't expect to see an extensive list of activities associated with each entity, and that is made clear in the guidance. This disclosure provides essential context basically needed to understand the next disclosure, Disclosure 5. Disclosure 5 is focused on what's called country-by-country reporting. Country-by-country reporting is essentially reporting of data for each jurisdiction. Sometimes, in most cases, this equates to a country. In some cases, it's not quite equivalent to a national boundary. So in the case where, for each jurisdiction in which the organisation operates, they need to report the following information. Revenues, split by third-party sales and intragroup transactions between that tax jurisdiction and other tax jurisdictions. This, by exclusion, means that they don't need to report revenue that is generated between entities within a single tax jurisdiction, so only between tax jurisdictions. Profit or loss before taxes, corporate tax paid on a cash basis, corporate tax accrued on profit and loss, taxes withheld on behalf of employees, taxes collected from customers on behalf of a tax authority, and industry-related and other taxes or payments to governments. It goes on to ask for number of employees and total employee remuneration on a country-by-country basis, tangible assets other than cash and cash equivalents, a corporate tax reconciliation, and for a listing of significant tax incentives. Revenues, number of employees, employee remuneration, and tangible assets other than cash and cash equivalents are essentially included as indicators of the organisation's scale of activity within a particular jurisdiction. There are also, I would say, 2 reporting recommendations that are not listed on this slide just for this particular disclosure, but are of course included in the draft standard that was provided to you. So that's an overview of the draft standard as it currently stands. The structure of that standard, so the core aspects of that standard, have not significantly changed since the technical committee first designed it. So the 5 disclosures have remained the same in structure, and of course we have been discussing and refining content throughout the process. Did anyone, before I move on to the feedback, was there any clarifying questions on those, or would you like me to keep going and come back to those?
Speaking for myself, I have loads of questions, but I'm wondering if we ought to just sort of, if you bring us through the feedback that you've had during the
field test,
this field test, and then we can come back to it.
Okay, no problem.
Thank you.
Okay, so if we move on to the recent field test, as I mentioned, we carried out a field test during July and August. And as discussed when I presented to you last time, given the new nature of this particular content, this was really an opportunity for us to test the draft disclosures with interested parties prior to a formal public comment. During that field test, we engaged stakeholders through a variety of means. We had webinar, one-on-one meetings, and also written peer review, so where organisations went through the draft standard in detail and provided written feedback. And this obviously allowed us to gather a range of feedback. It was provided both verbally and in writing. The field test had 4 key objectives: to test the clarity, feasibility, completeness and relevancy of the current preliminary draft, to increase the level of input from the business constituency, something that had been identified by the GSSB previously as a key need to continue to strengthen the underlying rationale for this standard and its component parts, and to test the alignment with other existing or emerging initiatives. The questions we asked were focused primarily on the clarity, feasibility, completeness and relevancy of the components of the standard. I won't run through these questions, but you can see here we really wanted to understand if it aligned with the expectations of stakeholders, both those who are reporting organisations and of course report users. We wanted to understand if the information that would be reported against these disclosures would be meaningful for report users in understanding the performance of organisations in relation to taxes and payments. And we wanted to understand if there was anything that was unclear or missing or was not adequately enabling an organisation to understand what they would need to report. So in total, during the field test, which took about 6 weeks during those months, 30 organisations participated. There were, of course, more individuals, but 30 discrete organisations. 13 attended the webinar that we held. 12 were engaged through one-on-one meetings, and 5 people provided detailed written feedback. Representatives were engaged from mediating and investment institutions, from civil society and from business. A significant proportion, almost half, of the stakeholders engaged were either from the business constituency or from mediating institutions who represent business. The feedback we gathered ranged in its specificity from high-level commentary around concepts of country-by-country reporting and reporting on tax in general, through to detailed comments on specific items, indeed specific words within disclosures. Much of the feedback was focused on Disclosure 5 and country-by-country reporting. Okay, so I'll just run through an overview of some of the comments that were made. I'm not going to outline any of the more detailed comments, but of course we can discuss anything in particular that you would like. So stakeholders generally expressed a high level of support for the intention, content and relevance of the standard. There was also acknowledgement across the board that improving the level of transparency in relation to taxes and payments to government is a worthwhile endeavour. Participants confirmed that the management approach disclosures, so disclosures 1 to 3, are aligned with stakeholder expectations, or were aligned with their own expectations, and require information that is relevant and of value for report users, as well as being feasible for reporting organisations. That's not to say that those disclosures wouldn't represent a step change in reporting for some organisations, but there was broad agreement that these disclosures will encourage best practice reporting and will enhance the understanding of how reporting organisations are approaching their tax affairs. The topic-specific disclosures received, of course, more varied feedback. Many participants acknowledge that public country-by-country reporting is directionally where they expect taxes and payments to governments transparency initiatives to go, and representatives from the civil society and investor constituencies in particular validated public country-by-country reporting as a key method for assessing an organisation's approach to tax planning and the associated risks. In some cases, participants did express uncertainty about the purpose and value of public country-by-country reporting, so specifically public. They were unsure about whether the information would be useful, could be usefully or appropriately interpreted by their stakeholders and by other stakeholders with limited technical expertise and context. In saying that, on further questioning, there was no suggested alternatives to country-by-country reporting proposed or put forward by stakeholders. A proportion of the stakeholders engaged stated that the bar is set too high in relation to the country-by-country reporting in the draft standard, and this raised questions about feasibility, cost and reasonableness. Representatives from the business community in particular questioned the balance of disclosure with compliance cost and utility for users. Some participants recommended consideration of refinements which would reduce the volume of disclosures required or introduce a level of flexibility, in particular in the near term. Concerns regarding the level of reporting seem to be heightened by a sense that the reporting requirements of Disclosure 5 in particular are not aligned with existing guidelines or reporting requirements. I would just mention here that the majority of the business stakeholders that we engaged were from the extractive sector. So they in particular have existing requirements related to the EITI and EU country-by-country requirements for extractive and logging industries. This comment is only relevant to a very limited set of industries. As I mentioned, these comments, so the comments that I've shared, are currently being considered by the technical committee. They've endorsed some specific changes already, and next week we will look at some of the bigger questions in our meeting. We expect to be able to finalise the technical committee's response to this field test commentary in the coming weeks, and then submit a final first draft to the GSSB for consideration and approval for public exposure. This is a timeline that we've presented to you before. Besides the change in our submission date from today to next month, there's no further changes to the timeline expected for the project at this stage. So I might leave it there.
Thank you very much, Mia. Kent, I'd like to invite you as the liaison from the GSSB to share your views, your experiences working with this group, and where you think you have landed with this content.
Thanks, Judy. I'd be happy to. Yeah, I've attended all of the meetings of the technical committee. I will say this, I was very impressed with the quality of the committee members, their understanding of the issues. As you know, I'm an accounting professional. Many people on that committee were accounting professionals. They were very engaged, and everybody spoke freely about their particular concerns or feelings about how the reporting should take place. I also wanted to mention that I was really impressed with the ability of the standards division, Mia in particular, to somehow translate what was talked about at these meetings into a standard that's very clear. So it's very much appreciated. The standard as it's written is very thorough. That is, it covers the ground. And in my mind, it's clear there are some technical changes that are being made. I think those will be good. But it's pretty clear what it is that is being asked for. And so as I read the document, absent thinking about what reporters would be willing to do or what there are concerns that reporters have, I'd say, well, this is really well, I can't really complain about it because this is really well written and very thorough. But having said that, I do have a couple of concerns, and they come down, they're really in the disclosures 4 and 5, and 5 in particular with regard to country-by-country reporting. One issue that's gone back and forth is the issue of materiality. And we know that in general, when we're doing sustainability reporting, we're supposed to consider materiality as part of our reporting decision. But if you read that particular disclosure 5, it really asks companies to disclose tax information on every single country that where they have a tax jurisdiction or where they operate. And so that's there's no materiality standard applied there. And we've talked a little bit, I've talked with Mia and Bastian a little bit about language and how this might be interpreted by people, but there's nothing specific in there that says, mentions materiality. And I guess my question is, I question whether that's consistent with, the rest of the standards, that is, our generally we consider materiality in reporting. And there are feelings of people that were part of this committee, felt that it was important that all reporting be done by every country. And I question whether that's consistent with what we expect in a sustainability report in terms of materiality. But again, this is a document that they've agreed to, and I don't want to really cast aspersions on it. They've done a good job. So materiality is one issue. The other one is, and some of this came up in what Mia said, is that remember the way that this came up originally is the OECD requires country-by-country reporting on income taxes, right? This is to find out what countries companies are really paying taxes to. First of all, it's not public, and second, it's focused, again, just on income taxes. And so when in the testing that was done where you hear people say, wow, there's more to this than there was before, that's true. It's sort of true in two senses. One is that we're asking for all taxes. We're not talking about just income taxes, right? So the listing there lists every other kind of tax. And so that would be something new that companies are not used to reporting on. And in fact, none of this has been anything that companies have had to report on publicly, except in a few industries. And so, you know, this is going to be new and beyond what certainly beyond what was in the OECD requirements. Nothing wrong with that necessarily. But I think also that there's the required reporting does ask reporters to do some things that they don't normally do, and we can talk about specifics. There's a corporate tax reconciliation on a country-by-country basis. I think it's something that companies don't do in general. So we are asking them to do some analysis that they haven't probably done historically. And so I think as this concern about is it too much too soon, I think that that's a legitimate concern, whether we ought to think about what it is that we want companies to do initially and maybe phase in some of this later. I'm not sure how that might go forward, but I do have a concern about the overall reporting. With the lack of any materiality standard and the number of items that have to be reported on, then the end result is that you're going to end up with a very, very large document for companies, with a lot of detail. And I also have the concern as we go out in exposure draft that companies, are going to continue to express concerns about sort of the volume of data that they would be required to produce.
Thank you very much, Kent. Okay, let's get some views on the table from GSSB members who have. I see Michel going for his for his well. Please feel free to kick us off, Michel, and let me know if you'd like to speak. Yeah.
Okay, I will give some comments as a reporter. In fact, we already disclose what is in disclosure 4 here, meaning we disclose. We're a company of sales that are around 10 billion euros. But that represents 363 legal entities, 200 of which are fully consolidated. And the consolidated ones are in 35 countries. So disclosure 4 is not an issue because it's already disclosed. Disclosure 5 would require a lot of clarification because should we disclose these elements in every country where we have operations, meaning where we have legal entities, or in countries where we sell, because we may sell in countries where we don't have legal entities. If that's the case, it's up to 140 different countries for which 12 figures are asked, so we're probably beyond 2,000 figures at the total. Especially if we need to split it by legal entity or not. So that's what I mean here. What I think would be fair is to be consistent with the financial materiality. And there, in our case, it would limit itself to 35 countries, which is already a lot. But so, okay, that's the kind of feedback. I think it's consistent with what Kent said. What is sure is that being comprehensive on that one will take some time.
I can address that specific issue. The numbers in here are supposed to tie to the consolidated financial statements, and so the requirement would only be to report for those companies that are being consolidated in the financial statements produced by the company.
Okay. Which is already an element of materiality, at least from a financial point of view.
Kirsten.
Thanks for the comments from Kent and from Michel, which I, to a large degree, support. But first of all, where I come from. Hydro has been reporting according to IT since 2005 on a voluntary basis all the time. We have been reporting according to the Norwegian country-by-country reporting requirements from 2014. They were then compliant with the EU regulations and with additional requirements. And now from 2017, there were added more requirements to the Norwegian requirements, which means I, for 2017, had the responsibility for one of the very most extensive country-by-country reports worldwide. This document goes far beyond those requirements. Like the Norwegian accounting law and their requirements, it seems also that they don't always understand how corporate accounts are being prepared. So there is lots of information here that we can't just draw from the audited financial accounts, but they have to be put together solely for this purpose, based on the figures that the consolidated financial accounts are based on. But we can't just take it out of the statements. For instance, the requirement about consolidation per country, we don't do that in my company and in many other companies. Because we consolidate per business unit. So if I should have started, or go back to square one here, I would have said that tax payments would be material to all companies, which means parts of this should be included in the general disclosures. And then you could have a second part on country-by-country reporting that could be for those companies where this is really material. Then you need the materiality principle. For instance, all extractive industries would be part of that. But that also means that we have to simplify this a lot to make it a requirement for all companies to report on certain data. When we are looking into the separate economic standard, I believe it's important to make it aligned with the IT and with the most relevant legislations, including the EU. Australia, I believe, has similar requirements, and a possible Dodd-Frank regulation. I heard yesterday or the day before that the Dodd-Frank regulation on country-by-country reporting is moving again. In addition, I have very many detailed comments. Thank you.
Jürgen, please.
Well, I do understand that this requested amount of reporting causes a lot of efforts, burdens to companies. At the same time, the public discussion in general, not only in Europe but everywhere, indicates that societies are expecting more and more information about the contribution of companies to the public good. Means, how do companies pay their taxes? The discussion about that is increasing very much everywhere. And from my point of view, as a citizen, I would say a company who is able to invest a lot of efforts, staff, time, whatever it is, in doing business in a country, then it's not very convincing when the same company says, well, that is possible to do, to invest in the business, but to report about what we are doing there, that is too much. So I don't find that very convincing. I know we expect a lot, but this is part of the business. And a company who is doing business can also report about it. I see it so simply.
Yeah, Robin, you're about to. Yeah, go ahead.
Yes, I just had a question about the discussion in the committee around the Extractive Industry Transparency Initiative and how much, what's the quantum difference in terms of this document going that much further. No doubt there was a lengthy discussion about the general level of alignment with those disclosures, but also their reservations about how much of a leap this might be.
Actually, a lot of the discussion focused more around the OECD base erosion and profit shifting, so Action 13, so the country-by-country reporting, which is not public. And then, of course, things like EITI and also the additional public country-by-country requirements for extractives were there as consideration. I suppose there was a general feeling in the technical committee that a number of those initiatives don't provide stakeholders with sufficient information to give an indicator of performance or appropriate performance and approach, and that they've been somewhat limited. And so they, in order to be able to make some sort of assessment about further interrogation of an organisation's tax behaviour, that it needed to be sufficient information, both contextual and tax related.
Maybe just one more comment to this. I think in relation to EITI specifically, I think the commentary is in particular from civil society as well as from investors that the information reported is a stepping stone but not sufficient. And certainly not sufficient from a tax disclosure perspective. It has actually a different purpose, also a different scope in terms of countries covered, and drives a particular element of relationship of corporates and national host governments then, but it is not to be equated with what the purpose of this type of reporting is. I think there is, in the proposal that we have now, nothing that contradicts the activities, but it is building it out further, and I think the scope is overall wider. Also, I think we should say that, generally speaking, the leaders in the space, in terms of reporters that do some kind of tax and payments to government reporting right now, tend to be, in the extractives industry, tend to be affiliated with EITI overall. So that there is, so for them, this is an extension to what they have been doing. Yeah.
I'll share my own thoughts. From my perspective, I've got just several different areas of questions and concerns. I have a whole lot of sort of individual small comments about language and definitions and so forth. But I have a kind of overall observation that it feels problematic. It feels that this proposed standard has been written to some extent without regard to the GRI standards as a whole. There are constructions in here that we don't use elsewhere in the GRI standards. We don't use the term is expected to. We use shall, should, and can. So there's language in here that just doesn't work with the rest of the GRI standards, I think. And I won't go into a lot of detail around all of that just because it's very, we'd spend a lot of time on it. My other kind of higher level concerns have to do with, I did identify the same issue, Kent, as you did with respect to materiality and the other content selection principles. What exactly would render this topic material or not material? Do we have any kind of a view on that? And if there are universal disclosures related to this topic, why on earth would the topic-specific standards then not be material? It's a very, it's sort of conceptually, it's not quite there yet as far as those content selection principles are concerned, to my mind anyway. I have concerns. We just cast your mind back a few minutes ago when we were talking about the Human Rights Technical Committee. There, too, we were looking at the possibility of quite a few changes to Standard 103, to the universal standards. That might very well be the right thing to do, but we're now looking at doing the same thing with respect to tax, and I'm concerned about piecemeal changes to 103 and what the overall sort of trajectory. You'd like to come in on this?
Yeah, I'd like to clarify. There is no intent here to change 103. So this is in line with what we did for occupational health and safety and water. We are inducing additional reporting requirements on in the topic-specific standard on a particular subject matter. So there's nothing actually flowing from this discussion that would impact, from a recommendation perspective at this stage, the universal standards. And actually, probably at the heart of it is the consideration that because of the fact that this is not practice right now, moving this into 103, or for that matter, actually 102 general disclosures would mean it is required for all, which is unrealistic at this stage because 99% of the companies are not doing this at the moment. Yeah, so I just wanted to clarify that.
Thank you for that clarification, and you've just made my final point, which is that even if this proposed content is has a very strong rationale behind it and a very reflects public expectations very well. Outside of the extractives industries, you can practically count on one hand the number of big companies that are reporting anywhere near what's in here. It is well outside the knowledge of your typical sustainability reporting manager at a company that is one of GRI's users usually. It's highly technical in nature, and if they don't have any sort of examples within their own industries, companies just simply don't go out on a limb with these sorts of things. So I'd be very concerned about what clever process could we use to potentially introduce this to the market over a period of time that primes people to actually be able to do it and doesn't just say, here's a very, very demanding standard that you're not doing and most companies in your industry aren't doing right now, and have at it. I mean, I'd be really concerned about just sort of publishing it the same way that we do other standards and expecting the same type of uptake. Yeah. So anyway, that's entirely, these are my views. Yeah.
I absolutely agree, Judy. Another concern is that I do believe that the additions to the management approach here are extremely extensive. So to make this useful for reporting organizations, I do believe we have to simplify this a lot, and then throughout the document, and also say something about what are the expectations for extractive industries and what could be emerging best practice for other industries. Because I don't believe this will help a bit to introduce this standard when it's so far away from where most companies are today and have any intentions of going today. If we do it a bit more stepwise, I think it's much easier to create change than doing this massive stunt.
Well, I would like to pick up on in particular the commentary on how we set it into the market, because I think one issue we're facing here is that in its totality, with the requirements set out, and again, this is not the final draft, and whether these are requirements or recommendations is something, especially for Disclosure 5, that the technical committee will look at still. But when you look at the totality, this is a big leap for almost all reporting organizations. But we have, like with many other issues that we've introduced, I think a system where an organization will never start to report in full on a standard to begin with, simply because they don't have the data. I think we've just introduced water and OH&S. Except for the leaders in those respective areas, there will be no multinational that is capable of reporting these standards in full anytime soon. That's why we have agreed a transition period of several years. And I think here there is a similar dynamic that we need to look at. When you look at the expectations set out in the management approach, the aim was to actually be very close to what is in regulation already and what is set out in the few principle-based expectations around tax disclosure, as well as in the EU discussions. So actually we have not received from companies as of yet commentary around the management approach disclosure as not being feasible. They actually say this is what we expected to see in a standard like this.
Outside extractives?
Yes, for those that have dealt with the subject matter, yeah. And this is not to say for those that have never seen something like that. It's a big, I think, a step for them. The other element of it is when you then look at data and country-by-country reporting, it goes back to the commentary around materiality. Will an organization be able to build out country-by-country reporting on hundreds of jurisdictions in some cases, but certainly more than 20 or 30 in one go? Probably not. So they will logically have to apply some kind of scheme here and to roll it out over time. And we actually provide, with the reasons for omissions, also the ability to do that. They can postpone disclosure on certain and explain the rationale why they're focusing on certain countries first, and over time augment that. The question that is yet to be answered by the technical committee, and maybe also in a public comment, is whether there is further guidance next to the fact that we're focusing on consolidated in terms of limiting the scope and the number of countries. In terms of utility of this information, I think it's also important to highlight that there's very strong feedback, in particular from investors, that say there is a point where the utility of this whole exercise is lost if the scope is too narrow. And I think a slightly different argument from civil society, where they say if you only handle a financial materiality approach to a threshold and the scope of countries that are covered by country reporting, you will likely leave out the countries where it matters most that transparency is induced. And it goes contrary to the EITI, for example, where there is a focus not on the countries where there is the highest tax volume or sales or anything like that, but it is a focus on the countries where there is activity that is, from a country perspective, relevant in terms of overall contribution to society. So that there is also there is a risk in that discussion as well. It is not to say that there is an answer yet, but the technical committee is also looking in particular at the points that were now highlighted as particularly cumbersome and so consolidation, for example, reconciliation, for example. They're looking at actually making these requirements a lot softer in terms of the expectation that is set out. One more point about it is I think we need to move, if indeed what is set out is not clear in the text right now, then we have to deal with, and Judy, you alluded to it, it has a lot to do with, this is geared towards accountants getting involved in using the GRI standards and tax professionals getting involved here. Actually, the feedback from the tax professionals and accountants is that this is comparably very clear to requirements that are set out elsewhere. And actually, we haven't seen a lot of commentary that there is an issue with this at all. That's not to say that there aren't issues, but then we need a much wider group. So I think from in terms of definitions, you can do a bit more, and we have received feedback on it. But in terms of setting out the requirements and everything, there's very clear feedback from the tax professionals that they understand the expectations set out. How do we bridge the gap to our main audience right now, the sustainability professionals? That's, of course, an important question that we have to address.
I'd just like to address one point, Judy. I think in terms of the language, you said the way things are stated is not consistent with how we've stated things in other parts of our set of standards. I think that's true. Remember, this is a group that didn't come from a sustainability background. They're a group that come from dealing with regulators. And so one kind of has that sense in dealing with them. And we need to, if the language is sort of said in the wrong tone, I think that we need to correct that for sure. But it's not particularly surprising from this group that really hasn't been focused on sustainability and sustainability reporting, but for the most part has been focused on dealing with regulators, which is a much different world in terms, because you know, in the world of regulation, you can sort of tell people what to do and they sort of have to do it, and we don't quite live in that world.
Maybe just on this point, it would be very useful if we also can inventorize, not as part of this discussion, inventorize specifics on the language, because it is actually exactly the language that is set out in the style guide. Like is expected. We've just introduced it in the standards that we've published. So we need to have a look at what it is that is at odds with your expectations around language, because this is probably the one project where we have, at this stage, most extensive work on language also, and bringing it in line with the style guide that was set out for the standard. So having a look at that is very important for us, also because we won't be able to produce a draft for exposure if we don't understand the detail of that expectation also.
Unfortunately, I have not been able to check some of this language with our IFRS expert in Hydro. But I know from before that the language used in the legislation, for instance, does not always is not always aligned with the accounting language, which makes it even more challenging when neither the sustainability reporting specialists nor the accounting specialists really understand what is being said in the legislation, or in this case then in the reporting framework.
Thank you for that comment. I think we were acutely aware of that challenge, and it's one of the reasons we really sought out a variety of people to read this in detail during the field test, in order to ensure that it was comprehensive and comprehensible. So we have had some minor wording changes, though not to the point that you're getting to, Judy, around alignment with other standards, but certainly from a technical point of view, the commentary we got was quite minor in terms of ability to comprehend what was being asked for, both from business and also from some academic and like individuals. But I'd be certainly interested in understanding the view of people that you've worked with in existing reporting as to whether they had any different opinions.
Nand Kumar, you had emailed me the other day a few thoughts, and I wondered if you wanted to share those with the group here.
See, what I had shared was, one is, especially in the region where I come from, the taxes are paid not only to the government, but also to the local bodies. So when we say government, we may miss out a big part of the tax which goes to local bodies, which is not deemed as government. That's one criteria which I had. Second was, as she said, the tax is basically a governance issue, and it's a compliance issue. So there is no question of materiality there. Everybody needs to report on the tax, and they are reporting the tax on the annual reports. So why one more reporting in detail? And in a companies like some of the software companies which operate in more than 100 countries across the globe, for them to report this country by country will be very, very difficult. And in fact, rather they will prefer not to report. That's the third challenge which I had posted. Thank you.
Yeah, I think that these are the things we're all struggling with. Is, you know, I guess I have this same concern that if we sort of put this out in the marketplace, that people would react negatively too strongly. It is important to remember for OECD countries, they are reporting the income taxes. They're doing the country-by-country reporting right now. They're just not doing it publicly. So there's sort of two issues. One is, you know, is it palatable for a particular reporter suddenly to make this public, things that they maybe haven't had to do publicly? And then second is there, you know, have we gone so far beyond sort of the OECD requirements that there's just too much? And I think we need to consider both those issues. If there's taxes paid to something other than the government, I guess I would like to get language that we could use to clarify what we mean by that.
See, tax other than the government is the local body. Like we have a lot of setup wherein a lot of villages collect the tax. You are setting up an industry close to the village or on the village land. So you don't pay to the government, you pay to the village, which is technically not considered as government. Similarly, you have an association wherein you have built a area which is an industry association. You pay tax to the association, and in turn the association pays to the government. So once again, that is not considered as government.
Well, I think we need to clarify this. And it may be, you know, these are sort of global differences in terminology. That is, where I come from, the local community would be considered part of the government. It's just a different government, but it's part of the government. But we need to work on that terminology.
Okay, Kirsten and then Robin.
Yeah, you do have language on that in the EU regulation, where it is per authority and per project. Project is not defined, by the way.
I'm not sure if this is desirable or not from the group, but I was wondering if we could ask the technical committee, because their meeting, the next meeting is early October, is that right, next week?
Yes, currently tentatively scheduled for next Wednesday.
I was just wondering what the implications are if we ask them to consider, if it's disclosure 5, the country-by-country reporting, that's causing the most consternation. At the moment, the recommendation is that that to get to be in accordance and have core reporting, you need to disclose both 4 and 5. Is it meaningful to just have disclosure 4 and maybe have disclosure 5 as part of the recommendations associated with disclosure 4? And that might give the option of, you know, spinning disclosure 5 out as a separate disclosure down the track once there's some capacity building that's occurred. I'm not sure if that's something that the group, the Standards Board, wants to contemplate as a recommendation for the TC to consider or not.
I mean, I obviously wouldn't want to speak for them. We have to put that specific question. But I can reflect that we have had numerous discussions about which components should be in and out of 4 and 5. If you look at 4 and 5 as a single piece of reporting. And consistently, the technical committee has been clear that you need a completeness to this information for it to be useful and to have any sort of meaning. So of course we could put that proposal to them, but I think then we would be looking at essentially what is a list of entities and a list of jurisdictions and what an organisation does in those jurisdictions at a very high level. So again, put that question to them, but I think it would be taking away the core of the purpose of country by country.
Mm-hmm. Yeah, I think acknowledging all the comments that Mia just made, there might be, and I think this is the direction of travel for the technical committee right now, is a review of disclosure 5 in light of what is a requirement and what can be a recommendation. But basically spinning off disclosure 5 and saying this is only recommendation, at least for the leaders, at varying nuance, I think, there, but for the leaders, that's what they've achieved already, right? There is more expectation now about detail of the management approach. This is probing into really how prepared is the organization, how embedded is the practice, and leaders will have to probably evolve their reporting a bit to get to that point. But 1 to 4 is pretty much what is generally agreed for is the expectation. 5 is where the difference kicks in, and that's actually for example, from an investor perspective, where basically the feedback has been, it's all interesting what's reported under 1 to 4, but really we need basic information about 5 to place this and come to risk profiles and all of that. And civil society, different perspective, but same answer there is without evidence for it. The question is then how detailed does it need to be? And you have very many things. So one thing that we're certainly going back to already with the technical committee next week based on the field test is how much of the A2, K, needs to be reported here. There is an interesting dynamic that I would like to point out. For example, the OECD is focused on income tax, right? This has been the predominant focus of the multinationals that have been preparing that now in OECD countries and affiliated countries. So this is happening. At the same time, especially business entities bring back that this type of reporting, also to tax authority, if you think about it from a public perspective, is not actually reflective of their contribution, because that brought in an additional element. They are saying, we actually want to explain the other areas where we are contributing. So this is not something that necessarily is something that the investors or civil society have brought up, but they say it is unfair to be judged based just on income tax contribution, because it is a tax that is oftentimes not effective in the way it is levied on corporates in the first place. And in some jurisdictions it is not explaining the contribution at all. And if you then decipher some of these elements, for some of them there are actually different groupings behind asking for them, and they see utility in them. The last one is a good example for this could be a recommendation if they want to go beyond and explain their contribution other than income tax. They could use that, and this might be where we can actually start to moderate the overall level of requirement. But I would be interested to hear from Candace as well here. But I have doubts that at least from a technical committee recommendation, and that's not then what you have to decide, of course, that they would feel comfortable to put everything that's in 5 under recommendation. I think they wouldn't see that as an effective way of pushing this issue.
Yeah, I agree with what you said, Besh, and I do think that many companies would like to report on other taxes, because there may be a country where they don't really pay income taxes, but there's a high likelihood that they pay property taxes or employment taxes, and they may, that might show them in a positive light.
Okay, I have Michelle and Kirsten, and I have Sulema down the line. Michelle.
It's a very short intervention. I would like to point that the list of countries in Disclosure 4 may be different from the list of countries in Disclosure 5, depending on accounting models used by companies. If the accounting model is buy and resell between countries, the list would be the same. But if it's direct invoicing or central invoicing or the use of commissions, it may be very different, because if I understand correctly, in Disclosure 5, it's sales in each country that are interesting, whatever the origin is. In Disclosure 4, you have a list of legal entities, and their turnover may be very different from local sales.
Thank you for that comment. Just to clarify, Disclosure 5 requires the reporting of these items for the jurisdictions listed under Disclosure 4. So there was a direct line from Disclosure 4 to Disclosure 5.
That doesn't necessarily resolve the issue that Michelle is pointing out here. And if you
what I'm pointing out is that, let's give a very simple example. If I have a company in Belgium buying from all the plants in Europe and centrally invoicing customers, sales will be very important in Belgium, but it's not sales in Belgium, it's sales from Belgium. What is interesting, I believe, is sales in each country compared to the resources and tax a company may have in that country. So if we have to report sales by country, it would be sales within that country, whatever the country of origin is. You see, this is where I'm saying the accounting model affects it. In this very simple example, it could be very well that in Disclosure 4, the only listed country will be Belgium, whereas I sell in whole Europe. In my opinion, it's not an issue from a tax point of view, because taxes are always paid by local entities. But if figures are expected on sales, it's a total difference.
And if you were to sort of extend the metaphor a bit, you can imagine somebody here in the Netherlands clicks an advert for Starbucks coffee, which appears on a web page through an agreement between Starbucks and Google AdWords, which triggers a sale in Seattle. Where is what value generated from that? Did that happen here in the Netherlands? Did it happen? So I mean, I think there are, especially outside of extractives, there are just really difficult questions about.
Could I address that specifically? Remember that they're already making these decisions. The OECD requirements, they're making these decisions. That's why we sort of avoided the details. Sort of the accounting decisions have been made, you know, with regard to the kinds of issues that you're bringing up. So where does that revenue show on a tax return? And so you're right that internally to the company, there are a lot of issues, but companies have made those decisions already somewhere. And I have a little concern of us becoming that, going that deep into the rule.
On that, Kirsten and then Sulema, and then did you want to come in?
Back to Bastian's comment about the need of reporting more than what is required by the legislation, or even reporting on things that is explicitly said in the legislation that should not be included. I suppose that was a comment from me too when we were discussing it, Bastian. And of course, it's very important that the reporting standard opens up for giving additional information that is reasonable for the company to add, and that can be clarifying in many contexts. I'm not in principle against the disclosure 5, but I think it's way too rigid as it is now, and that has to be looked into. Thank you.
Can I propose an action also? Because I think Kent, Mia, and myself, we need to bring that back to the technical committee, that last item, that we emphasize to the technical committee as an outcome of this discussion, that we have to look at how we can moderate expectations that are currently set out, in particular in Disclosure 5, and look at them again at the line items in Disclosure 5 and come to an evaluation of which of those are strictly required to come to a set of information that would represent decision useful information actually as a set, and what could be looked at as information that in the best of all worlds should be available for those that take decisions, but probably is too advanced right now given where the reporting practice is overall, and also what maybe needs more evolution in terms of what's happening with the leaders at the moment. I would like to note one other point in relation to that, and I think we need to go back to the committee as well. I've been hearing a couple of comments now about how, as if this type of reporting would almost trigger a new type of accounting. And that's actually precisely what the wording of the standard is not trying to suggest. It is going back to consolidated statements of the organization. So there's actually no decision triggered by this, and the expectations set out that would need to be taken differently if that is the basis. However, there is procedurally a lot that gets triggered because currently Kirsten has pointed to the fact that it's not done on country-by-country basis, for example, some of the reconciliation. So that is exactly the field where we are dealing with the feedback right now, and the technical committee has to come up with an opinion. But it is also, I think, when you in the interviews that we had, many organizations say the fact that we're not doing it right now doesn't mean that eventually we will actually arrive at a point with our processes where we can. And a lot of it got actually triggered by the OECD already, that they are starting to build out different ways of looking at existing systems. But again, nothing in that standard was designed to ask for like a second mirroring some kind of activity for the purpose only of sustainability reporting.
Sulema has raised her hand.
Can you hear me, Judy?
Yes. Nice to hear from you,
Oh.
Sulema.
Thank you, Gil, because it's working. Well, I do support what you said, Judy, and can some extent what Ken said and Jürgen. And I'm a little bit concerned about the Latin America companies, the feasibility for Latin American countries. The tax regime down here, it's very, very even difficult to understand for specialists. So I was figuring out how a company like Petrobras, for instance, could, even if Petrobras wants to disclose following the proposed standard, the payment of taxes to governments and other entities. And I'm not think that the disclosure 5 helps the companies here to disclose their payments, even if they want to. So I will provide more detailed comments to this proposed draft, but I want to raise this difficulty in terms of local tax arrangements and regulations. It's almost the same with the Nankumar already raised this issue, but here it can be a nightmare actually.
Just can we take action specifically on that? I think there was reference to legislation where it exists, formulation. When we look at that with the technical committee, I think the focus of this standard was not to reflect any type of payment by a corporate to different institutions within the country. And this is geared towards payments toward the government, the elected government in most countries, and the framing is the jurisdiction, the tax jurisdiction. So within that, there are variations of it, and it requires clarification. But I'm not sure that I think all regions have very particular ways, and all countries probably have very particular ways of looking at contributions of companies. But this is not the primary focus here. We need to really get to the bottom of what would be the difficulty, certainly also in the public comment, if indeed that is, it requires more language than we currently can provide based on an understanding of the issue, that we home in on this and go to the regions where this seems to be an issue and understand what additional guidance needs to be given around this.
Bastian, sorry.
Yes, go ahead, Sulema. Go ahead.
Oh, thank you. Just adding, I might not be very clear in terms of the difficulty here, because we do also have some mixed entities in Brazil that receives money that then they will transfer to the government, and they are allowed to receive taxes and social taxes and social payments. So I think there's a level of complexity in some countries and regions that should be considered. I'm not sure. I cannot recollect the composition of the technical committee, if there are accountants from the Latin America, but I will try to provide. I'm not an accountant, but I'm a former lawyer, so I know a little about our tax regime. So I will try to provide some hopefully insightful comments to the draft.
Thank you, Sulema. Kirsten.
I think it's important that we get the proper language in place here related to the different authorities that receive taxes. At the same time, I would be very worried if we should take in the full country-by-country reporting requirements from the EU, for instance, for the extractive industries, for all legal entities within a company, because then it becomes really, really cumbersome. This is information that you will not find directly from the accounting statements.
Can I note one more action that we look at the language of the current draft, also not in committee now, but that you provide the feedback for corrections to the style guide. And I think there was the formulation is expected, but there seem to be more things in terms of the clarity of the requirements and all of that. Because this has direct implications not only on drafting this, but also human rights. And a couple of, they are all based on the same style guide right now, and they're based on the style guide that we've used as basis for OHS and water. So there might be an oversight in here. We have to look at the detail, but it would be good to get an inventory fairly quickly, because otherwise we will put this process to a hold in October, trying to refine language. This should be easy to fix. I think there shouldn't be anything here that is creating this type of hurdle for this project.
Maybe just in these final few minutes, I wonder if we could just do a recap of what sorts of things the Standards Division plans to take back to the technical committee, where you see the most important pieces of feedback from today's conversation to be, just so we can clarify that.
Yeah, well, let me summarize it then on a high level. I think what is very clear is that members of the GSSB are concerned about the level of requirements induced by the current version of the standards, in particular in relation to disclosure 4 and 5, but also we should note the comments about the management approach and the detail of the management approach. I think a second line of commentary then is around clarifying whether the way and this is currently set out would actually obstruct in any way the application of general accounting principles in the way that accounts are created right now by multinationals. That was not the intent of the language. But we need to get to the bottom of it, whether there is really an issue, and we've noted a couple of follow-up actions related to that. A third line of commentary then goes, I think, specifically to disclosure 5 and the detail, and the explicit ask of the GSSB is to go back to the technical committee an action for the Standards Division and Kent as the project sponsor, and see what we can do in conversation based on the field test feedback and the feedback from this group to look at the requirements in Disclosure 5 and whether or not some of these can be presented as recommendations, and maybe more importantly, whether all of them are actually indeed, strictly speaking, needed. So whether that additional well, in totality, what they come up with is a reasonable ask at this point in time. I think there was then one overall comment that I would summarize is also that this is clearly acknowledged as a new practice to most, and that we should consider what kind of implications that has also in terms of setting this into the market, but also more importantly maybe where we are now as we're going in direction of a first public comment, that we explain what the kind of expectation is that we're setting out. For those that are entirely new to the standards, it might seem that when a standard is issued, this needs to be complied with 100% from the get-go, while there are different levels of implementation, I think, through the system that we've built up, and we need to explain that well.
May I just add to that? I think we also had a discussion of the sort of questions around the content selection principles, and what exactly is it that would render this topic material or not material for any given reporter, given that everybody pays taxes. What's the threshold for inclusion? Is it in fact a sector specific? Is there potentially a sector-specific element to this? Is it truly universal? Is there some kind of geographical threshold? We haven't really dealt with all of that, but we did talk about that a bit today.
Just on the last one, I'm not sure that we've done this for any other project so far to establish whether or not the issue at hand is material for a particular group. So that's an interesting question, I think, to consider now that this is entirely new. Maybe what we can bring it back to with this group in one of the next meetings is the question whether there are indeed contents in here that would need to move into general disclosures. The reason that we've not set it up that way was at the time that we said, well, this is not an expectation that can be set out for all at this point in time. And organizations need to come to a conclusion whether this is indeed material for them. That's hence the development of a topic-specific standard. But I think this requires more discussion because it will come up with other issues that are entirely new to the set of standards probably as well.
Yes, absolutely. Okay, Kirsten.
Thank you for that clarification, Bastian. Just a couple of more specific comments to the disclosure number 2. E and F, as far as I can understand, these are just more or less repetition of what should already be covered in the universal standards, and I wonder if they are needed here. Because if we should repeat mechanisms for reporting concerns, repeat part of verification or audits for all the standards, it would be a bit strange to me. That should be covered in the universal standards.
Okay, any last words from anybody? Nankumar, yeah.
If I have heard right, you said the 4 and 5 both to be reported. The disclosure 4 and 5, both to be reported.
The proposal from the technical committee is that both 4 and 5 must be reported in order to meet the in accordance standards.
But then this goes against the core and comprehensive criteria. Core, we say any one.
Well.
So then we are creating a new
There
rules.
we are, yeah. Right.
So we've just approved the water standard where we also recommend disclosure of several of the, so that it is not enough that they're interconnected to this topic-specific disclosures, and it's not enough to report just one because it's not actually providing sufficient information. That points to the in accordance and how it's currently set up, that it is actually not useful because it prompts a dynamic where you can then select out of a range of disclosures that only make sense in totality, right?
Okay, Kirsten, are you wanting? Okay. Thank you very much. Okay, so I want to extend the GSSB's gratitude to the members of the technical committee for their work on this. As we've noted many times already today, this is a new area for GRI to be considering with in this way with respect to the standards, and it gives us a lot to work on. So we look forward to the response from the technical committee and to reviewing the next offerings, which we will expect for our next meeting, or on what timing will we expect to see the next draft?
Well, I think given the discussions we had here right now, we will bring that back to the committee, and I'm not sure what kind of dynamic that will unfold, and whether then more work is needed. I think there is also a consideration, we will discuss it with Kent as the sponsor, where it's not set in stone that there is one public exposure, right? And what the first public exposure is geared towards. We have anecdotal feedback right now from a select group of leading companies in the space and knowledgeable other parties. We haven't engaged a wider set of stakeholders on this at all, so there might be a whole different set of feedback emerging from this, and I think we need to think through now at what stage we are, what type of feedback we need to also help the technical committee to come to further decisions.
Thank you very much. Okay, and thank you, Mia, as well, for your efforts on this. The next item on our agenda is probably a quick one. We think it's a quick one. This is a stakeholder submission. I will leave the detail of this to Bastian to explain, but there has been a technical glitch, which meant that a stakeholder submission that was received more than a year ago actually wasn't discovered until just recently. Yes. So, Bastian, would you like to tell us about this topic and what it is that's been put to us?
I will spare you the details on what happened exactly, but what it is really what Judy said. There was an email address set out at the beginning of the GSSB, at the beginning of the existence of GSSB, and the access to that email were not transferred in the right way internally, and we didn't capture this one submission that was, as you can see, submitted in early 2017. And it was against the background of the GSB discussion around human rights as likely one of the areas where more work is needed. The work program discussions were happening at the time. And it was specifically geared towards, and we have received feedback with the Technical Advisory Committee, the predecessor of the GSSB, as well as with the GSB from the stakeholders around disability. We have gone back to the stakeholders in question here, informed them about the fact that this has not been properly recorded here. That's why we're bringing it also back to you. And in future work program discussions, we will have to discuss this item specifically. It relates also to the question that came up in an earlier session today, which is what happens if we venture into the second phase of the human rights discussions, and to what extent we will work on topic-specific disclosures. Disability has been identified at times in our processes as a cross-cutting issue, which will come up in several areas of what the standards are covering right now. So we can certainly bring that back, but this serves the purpose of acknowledging that this has been received, that it is now properly recorded, and we have gone back to the stakeholders to inform them about the fact.
What is this simply for GSSB information at this point?
This is for GSSB information, and also that you're not surprised that when we look at the work program in particular, but also engage stakeholders on a future draft of the work program, that there is a stakeholder group that has articulated a view. And I think in the past what we've done with these views, and there were few in the past, but when there was a particular view expressed, we have also gone back to the specific group, asked them for feedback on a draft work program as part of our public consultation, and informed them about the outcome of your discussions eventually.
Now, what they have proposed is that the disability topic is taken up in the wider context of the human rights review. Is that underway, or is it outside the scope of the
right now, it pertains to that question of whether we will actually go into topic-specific discussions at all with that group, and I would see it then as one of the inputs to a prioritization exercise of some kind, which issue areas we're covering. It is not currently set out in the GRI standards as a standalone standard. Again, it might be cross-cutting, but this could form an input for the GSB discussions.
Okay, thank you. Are there any questions about this, or does anyone want to have a conversation around it?
Can I, sorry, Judy,
yes.
Can I jump in?
Yep.
Bastian, I'm curious if there will be a late response to this email, or what did Standards Division plans to do, because there has been a glitch, but we are taking into consideration late. It's a little bit late, but the email. So how the Standards Division plans to respond to the email?
So we did reach out to them already. We shared an item 4.1 with you on Friday last week. They have responded then to basically provide more input on the subject matter and reconfirm that they still believe that this is an issue that this body needs to take up. So we've already circled back to them and acknowledged that this has been an unfortunate technical glitch.
Okay, thank you.
Okay, well, barring any further discussion of this, thank you very much for bringing it to our attention, Bastian. This actually brings us to the conclusion of the public meeting. Unless there's any other business that has not already been identified as part of the public meeting, which I'm not aware of any. And the remainder of our sessions during our in-person meeting are information for this group. We will not be taking any further decisions at this point. I want to thank everybody who has participated in the meeting so far, and we'll look forward to reopening the public meeting in October. Thank you.